Good morning, ladies and gentlemen. It's Monday, February 24th, 2014. Welcome to Market Forecast, brought to you by Options University, and this is Butch Chorak. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Looking at the last week, looking at our indexes at the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see a couple of negative numbers for the week, and we see the Dow down 0.3% for the week, down 2.9% for the year. Not yet where it was at the very beginning of the year. NASDAQ is leading the markets up, and it was up 0.5% for the week. And we see year to date up 2.1%. S&P 500 down 0.1% and down 0.7% for year to date. Looking at the Russell 2000, up 1.3% for the week, and finally into positive numbers for the year. So we see ourselves creeping up, headed towards our previous highs, and that's exactly what our charts will show us as we look at them this morning. Looking at economic announcements for the week, we see actually on Monday very little happening on Monday. Looking at Tuesday, we got the Case-Shiller coming out at 9, consumer confidence coming out at 10, and Richmond Fed Manufacturing Index coming out at 10 o'clock. Looking at Wednesday, not much happening on Wednesday except for we see new home sales at 10 a.m. And then on Thursday, things start to heat up a little bit. We have jobless claims coming out at 8:30, durable goods orders coming out at 8:30 for the previous month. Janet Yellen speaking at 10 o'clock. They'll be watching her carefully, seeing what she has to say as our new Fed chief. And we see that on Friday we have the day where we have our biggest day of the week. GDP coming out at 8:30, Chicago PMI 945, consumer sentiment 955, all that before 10 o'clock. And finally at 10 o'clock, pending home sales index coming out. So towards the end of the week, we have much more in economic announcements than we do earlier in the week. The only one of real significance earlier in the week, jobless claims and consumer confidence. Looking at the SPX, let's take a look and see, as we were talking about approaching that triple top, where we had a top here earlier in the 3-month period. This is a 3-month chart. There's another top there and headed for that previous top, and we're looking whether this is going to be a failure pattern or whether we're heading up into new highs as we're in the strongest 6 months of the market year. So looking for a potential breakout here as we saw some consolidating take place last week. And finally, let's take a look at last week with a little bigger chart, and looking at a 1-month chart. We see that basically for the week we were consolidating near those previous highs of our triple top, trying to determine whether we're going to head higher as the market is looking for new highs with the favorable position that we have from the Fed. What does the Dow look like? Well, take a look here. This is what the SPX looks like, sitting right at previous highs and looking for newer highs to come out of the SPX. Now let's take a look at the Dow as we see the Dow lagging and not anywhere near its previous highs, and giving us a totally different picture than we're getting out of the other indices. Looking at the NASDAQ, which is one of our market leaders, there we go. We see the NASDAQ well above the 30 and 50-day moving average, certainly a new high area here as the NASDAQ is leading us through this first quarter. All right, well, let's go ahead and take a look at some of our other indices. We're going to look at the VIX. Remember, this is our fear index, and we see fear is very low in the market as we sit in this what one would call favored position in the economy, with the Fed providing so much economic support for the market. Notice we're not near that 12 level, but we certainly aren't anywhere near that 22 level looking at this 1-year chart on the VIX. All right, now let's take a look at some of our other sectors. Looking at our sectors, let's go ahead and look at the bonds, and looking at TLT, our bond indicator. Looking at it for the last year, you see that we had a high for the year just at the last month, at the end of the month, and now we've pulled back into a lower area again, actually sitting right at that 30-day moving average. Looking at our next indicator, let's go ahead and look at gold, and we see that if we're looking at the last year, again, not anywhere near our previous highs, but certainly bouncing off that low where we were down about 25% 5%. You see we've had a bit of a rebound on gold. That's our the perpetual hedge that we have for the market. And what did the SPY do during this last week? Well, let's take a look carefully and see what kind of volumes we had. So we had a little pretty decent volumes as we look at the volume down here as we're headed up into that triple top. Remember, one top, two tops, and finally looking for that breakout on the third top. And we'll see whether that's exactly what happens or not. And again, reminding you that this is the best 6 months of the year for the market. So cyclically, we would expect this to continue on as long as the Fed doesn't throw any curves at the overall market. And finally, looking at the financials, see the financials lagging a little bit. There's our previous high for the year. And as we look at it, we haven't reached that same high, as we're seeing a little bit of lag coming out of the financials compared to the S&P. So with that thought in mind, let's go ahead and look at oil, and we see that for the year, back in last August, we had our previous high during summer vacation time, and we see that we are creeping back up with the oil costs, or oil value, and we see looking at USO, our ETF for oil, we see that we're headed up, and let's see if we have a little bit of a pullback. If so, one might look for a bounce out of oil. All right, and with that, that is the week that just took place. For those of you that are gold members, stick around. For those of you that like more free videos, go to www.optionsuniversity.com/free gold. So this is Butch Shorak, and this is Market Forecast. We'll see you again next Monday. Brought to you by March Options University. It is February 24th, 2014, and thank you for being here.